Welcome to the lesson. How to predict price behavior using chart patterns. In this lesson, you'll learn how to determine significant levels, how to trade using classic chart patterns. Let's talk about significant levels. These are the main factors in technical analysis. If the price rebounds off a specific level, it is considered strong, and is likely that the price will rebound off this level again. Breaching such a level, on the other hand, accelerates price movement. Traders figure out these significant levels by analyzing past price behavior. Let's try to determine significant levels for the given example. Significant levels allow you to work out what direction the price will go. They are usually used combined with other technical analysis tools. Now, let's look at classic chart patterns. Chart patterns allow you to determine how the price will move before it actually happens. Here is a little about double tops and double bottoms. This pattern signifies that the trend is likely to change. A double top appears where the price reaches a certain maximum but cannot cross it and turns downwards. A double bottom appears when the price reaches a certain minimum but cannot cross it and turns upwards. What about triangles? The three types of triangle patterns are ascending, descending, and symmetrical. The first triangle pattern is ascending. It tends to point at the upper right corner of the chart. The second triangle pattern is descending. It tends to point at the lower right corner of the chart. The symmetrical triangle pattern appears where the support and resistance levels clamp the price. In the end, it crosses these borders and may move either downwards or upwards. Within the symmetrical triangle, price tends to form higher minimum values and lower maximum values. Pros and cons of triangle patterns. The drawback of triangle patterns is that they don't always indicate the price trend. Nevertheless, triangle patterns provide vital information. Whenever the price reaches its right-hand corner, the breakout is inevitable. Let's have a look at how several tools for technical analysis may be combined. We'll take significant levels, channels, and ascending triangle for this one. Such combination shows a trend change. The symmetrical triangle combined with pending orders helps you make a profit. This triangle signifies an upward or downward price shift. To make any money on it, set sell stop, buy stop, and take profit. In this case, regardless of where the price moves, you won't miss your profit opportunity. Let's summarize what we've learned from this lesson. Chart patterns allow you to determine how the price will move before it actually happens. Using technical analysis and pending orders will definitely help you get more profit.